And last thing is, somewhere there'll be a shakeoff. I believe it will be short-lived, but significant enough to scare out new people or weak hands or people that are unsure of the commitment to, the silver and gold markets. They actually go back and forth. In other words, there are times where silver leads, but when you see the big breakouts, it's gold and then silver. And if we go back to the beginning of this bull market, it happened in the year 2000 for gold. I forget what month. I haven't looked it up, but it was in the year 2000. Silver actually did not break out until it got above the 555 level, which was September of 2003. So let's just say that gold broke out in September 2000. I think it was early in the year, but so September 2000. So 3 years later, silver actually breaks out. That's a pretty big lag. And then once silver broke out for that 11-year bull market that you and I both enjoyed, excuse me, and we both enjoyed that, basically gold was year over year higher every year for 11 years. Silver outperformed gold in some of those years. There were years it was off. But it was a huge bull market for everybody. And then it got real frothy near the end. It started to go parabolic. And as you know, I call it the top. It's interesting, I have to digress. There was a podcast friend of mine, two of them, and he was talking about how hard it is to call top. And it is. I'll call it luck. But he didn't mention me. Usually he does. But anyway, I don't get my feelings hurt too much. The point is, we have a lot of things to go forward. So the second part of your question is is it different this time? Yes and no. Yes, it's different because the breakdown throughout the financial system is occurring worldwide. More and more people are recognizing it, and we're seeing sector rotation, which means the big money is moving into gold. It has been for years, as I've said to you and many others. The run to gold began when the central banks started to increase their allocations to gold. Silver's caught it. It's starting to do what it did in September 2003. It's made a breakout in this, what I think, last leg up. And this last leg up should be the most effective in capital appreciation, and duration-wise probably won't last that long relative to the totality of the bull market. So if you started from 2000 till now, it's 24 years long. If you started from the bottom, so I remember the month and year, it's still been many years since we hit the, 1,050 or whatever it was for gold. We're now up at almost 4,000. So I think I over-answered that, Charlotte, but I am still bullish, but all bull markets function is to shake off as many participants as it can. And we haven't seen one of those big shake-offs yet. I do expect we could have one in October. Well, first of all, you nailed it. One of the best clues to say that you're at a top is not only a parabolic move, but silver starting to outperform. It really isn't. And we know that from the gold-silver ratio. A lot of people, make light of it, but it's a useful tool if you know what to use it for. Excuse me. And what you use it for is to see if silver is outpacing gold or not. We're still in the 80s for the gold-silver ratio, which is historically high. And until we get to 70, I'm not going to be particularly happy. And off of today's gold price, a 71 ratio would be like $55 gold. $55 silver. And that would be over that 50 mark, which we're all hesitant about. And I'm writing about that in this month's newsletter. People see the 50 mark differently. All the technical types talk about, a double cup and handle, or a cup and handle that's, 50 years in the making. It's a very significant number psychologically. Silver's never gotten over 50 and really stayed there, and it hasn't in 50 years. So I think it could be a crossing the Rubicon moment, which means once it's accomplished, and I believe it will be, we've established something that hasn't occurred for 50 years in a precious metal known as silver. And that will have, I think, some psychological effects to the silver community. And for the algorithms, it will also have an effect because there'll be blue sky. In other words, everyone that's ever held silver nominally is at a profit in inflation adjusted terms, far from it. For many people that bought it, even in the 30s or whatever, inflation adjusted, they really haven't made any real significant gains. So I'm not anxious for it to happen. And the last thing is, in the previous moves into the 40s, silver really didn't stay there for very long. And now we are seeing like a monthly close in the 40s. And I'm actually happy to see us trade between, let's say we just consolidate here between, make up a couple of numbers, 47 and 44. And we stay there till the end of the year. A lot of people say, oh, see, silver can't go any higher. I would say, no, we're building another base to go higher with more authority than if we just bounced up there in the next couple of weeks. What scares me, being a futures trader in my past, is that you get a move and it just keeps going up and up, and then you don't have any kind of a base or any kind of support. So far, silver's making enough support as well as gold that these are strong markets that continue. I wrote about, and I don't usually take other analysts I do take other analysts into account, but I always try to be my work and, serve me well, because you can be influenced by others, and you should be. I mean, I've learned from many, many people in the resource sector over decades, but I still try to remain independent thinking. Having said all that, Charles Netter, who I think is one of the best timing-wise, he's looking for something in October. I wrote about that a few months back to my premium members, and I agree that October is, seasonality-wise, one of the more risky months in the stock market. And the way things are going with this government shutdown, the wars aren't getting better. It looks like, Trump switched his mind on Ukraine, and on it goes with all the stresses we have as human beings on a planet that just wants peace. We are seeing all those things occur, and the market is overvalued by any metric you want to use. It has been that way for a very long time. You'll see people say, now we've reached 50, we're going to 1,000, or we're going to 200. You'll see that extreme, the tail end of the bell curve. And then you'll see people like, it's only a matter of time. It's only been 2 weeks, and silver's going to crash down below 50 because it can't maintain that high level. It never has, and it never will. This is an anomaly. So you see those two tail ends of the curve. So it's 50, it's an anomaly, it's coming right down, and those is going to the moon. So where is it in between? And that's, kind of my job, to try to help as many people as I can, that, what is a likely scenario, and what is the top price, and no one can pick that ahead of time. But I do think with that, the psychology will be favorable to silver. So what right now is taking place is, the analogy of Lucy and Charlie in the football. He comes to kick football, and she pulls it away from him. And she does it again and again and again. And silver investors have seen that so many times that once silver got above 35, 38, they said, the football's coming away, I'm getting out, selling at 40. Oh, 44, I'm happy to take that. 47, even better. So a lot of people are actually selling back into the silver market. And in my view, they should hold on, but they can do whatever they feel is best. Some are just selling partial because they need the cash or whatever. But once we get to that new level, what's the middle between it can't get above 50 and it's going to the moon? Well, it's going halfway. So there'll be a lot less resistance. You'll see algorithms come in and start trading silver, and you'll probably see institutions come in because they know that it's a small market, and they can move the market with a buy order if it's significant enough, and just think that someone else will come in with as large or larger buy order, and they can trade out of it. In other words, buy it at 55 and sell it at 62 and watch it go to 70 or whatever. So it's going to be tough. I hope it doesn't get into that kind of a market, but I think it's more likely that it will than not, because so much of the trading in the general equity market is done by algorithms, computer trading, computers against each other, getting millisecond advance, being able to see a small spread that we can't see with a microscope, play that spread, millions of times, and come out with a big profit. So I really don't like the way things have gone technology-wise on the trading aspect of things. but I have no control over that. So all I can do, Charlotte, is, what I do best, and is try to take a calm, reasoned approach to what is reasonable and let my expectations be non-existent. Don't expect one way or the other, but just watch the market. Let it tell me. Well, country-wise, it's China and India. And, specifically, I think it's looking at it as maybe strategic. What we need for, building out more high-tech facilities and more solar panels and more things along that line. And I think India is oriented more toward the investment side with, having these ETFs that they have in India now, and the population being geared toward gold and silver. And then we've got, the Saudis have bought almost 1 million shares of the SLV, so they've got a big enough stake that they could actually ask for delivery of silver. And I think that's catching on. Of course, Russia bought silver and platinum not all that long ago. Some people know that. Some people may have forgotten it. So I think you're seeing silver start to come into the institutional side for both investment and for industrial purposes. And that's what I've always thought was the bonus for owning silver, is we could, not would, but could get into a situation where Tesla needs it for pushing things out of the factory, and XYZ pension fund needs it to hedge their position. They know silver's got, blue sky, it's at 55 and it's only going higher. So and I think when you have those two factions moving into silver for different reasons, the public will come back into the market. It's just one of those, FOMOs, fear of missing out. And oh my goodness, I thought silver never get above 50. But so-and-so says it's going to 1,000, so therefore buying it at 70 is great. And then it goes to, 85, and that person thinks, wow, I'm so glad I got it at 70. Now it's at 85. But those kind of moves, depending on how quickly they happen, can be short-lived. Again, I don't think we're going to see that. I think we've got a year or two ahead of us, and some people think 10 years. Fundamentally, I would say we probably got 10 years based upon the dynamics of the silver market with these continuous shortfalls we've seen for 4 years or so. The problem with that is, in my thinking, not saying anyone's right or wrong, is I see a complete shift in the structure of the financial system before a 10-year time frame, where we're put into a system of maybe digital currencies, with maybe even a cashless society, maybe even looking at programmable money, which we have, and looking at probably more oversight by the authority figures on our daily lives. That's one of my grave concerns, as you know, having spoken with me several times.